All right, hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. If you have questions or topics you wish to discuss, please chat those over now so that we can be sure to get to them all. All right, again, welcome to another session of the My Solo 401k Financial Daily Webinar Series. This is your chance to get answers. Please use the chat now to ask questions on today's topic or anything else. Please chat them over now so that we can be sure to get to them all. This is another one of our daily Solo 401k webinar and Q&A sessions with My Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, last minute guide to opening a Solo 401k for 2025. What must be done by December 31st? So as always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, investment advice. We would always encourage you to consult with your tax attorney and financial professional when making an investment decision. So let's first start out with some of the topics that are being chatted up. And if this is helpful to you as we're going through today's slides or the questions, if you could please like the video, it'll help us get the word out to other solopreneurs, other advisors just like you who might need this information to help secure their retirement. So it'd be very kind of you to please like the video. Also, if you want to get notifications of when we go live, so you get notifications of all of our crucial content that we deliver every day, whether you're on LinkedIn or YouTube or X or Instagram, if you could please subscribe, then you'll also get notifications of when we go live. Okay, great. So let's start out with a question from Amy. In order to meet the deadlines, can the investment account with Fidelity or Edward Jones be opened after December 31st? Definitely. So if you look at the IRS publication 560, which is the landmark guidance for self-employed retirement plans like a solo 401k, they make clear that all you need to do is establish the plan. That means the documents. You don't need to open up the accounts. You don't need to make the contributions by the end of the year. So just the documents are needed by the end of the year. You can take your time to open up accounts, make contributions anytime in 2026 by your business tax return deadline, including any timely filed extension. So it's definitely not a problem. Now, next question here is from Lewis. Establish the plan by December 31st. Yeah, we're going to dive into that deeply here. But I think the key takeaway is that a 401k is a legal entity. So like any legal entity, it's the documents that create it. So if you look at that IRS publication 560, there's a chart on page 3 where they talk about that in order to meet the deadline, you just need to establish the plan. So that means the documents, because we're talking about a legal entity, a 401k. So you don't need to open up the accounts. You don't need to make contributions. By the end of the year, you can take your time. And that makes sense from a policy perspective, right? The rules are different for self-employed individuals. For those that have a 401k plan at their job, you do have to make the contribution, that employee contribution by the end of the year. But the rules are different for self-employed individuals because a lot of self-employed individuals don't know how much they made until after the end of the year. So that makes sense that the rules would give you more time to open up accounts, to determine how much you're going to contribute and actually make those contributions. I already have a Fidelity account for a I already have a Fidelity account for a solo 401k, but it doesn't have the backdoor Roth. Do I need to create new accounts? You will need to create new accounts, but that's not the first thing. The first thing is to upgrade your plan. So the basic vanilla plans that are offered by the discount brokerages like Fidelity, like Schwab, like E-Trade, like Vanguard, just to name a few, do not allow for the backdoor Roth, the mega backdoor Roth. They don't allow for the tax credits. They don't allow for 401k loans, all the advanced features. So it's very common that folks will start out with the basic plan somewhere else and then upgrade their plan, meaning their documents, to our plan documents. Now they can take advantage of those features. So specifically with the Mega Backdoor Roth, the process would be to upgrade the basic plan of Fidelity to our plan documents, which you can do as long as you're self-employed with no non-owner, non-spouse, full-time W-2 employees. As part of that process of upgrading, which is referred to as a restatement, so you can think of it like a cut and paste, right? The existing plan documents that are provided by Fidelity that are limited are replaced, they're cut out and replaced with our plan documents. Now, mechanically, the process will be to open up new accounts for the restated plan, which can be at Fidelity. So even though Fidelity offers their own basic vanilla plan that doesn't allow for Mega Backdoor Roth contributions, they'll also open up accounts for third-party plans that do allow for the Mega Backdoor Roth contributions. So your existing accounts at Fidelity, from Fidelity's perspective, are governed by their basic plan documents. So new accounts would need to be created, which we help our customers do that as part of the onboarding process, which can be done next year, doesn't have to be done now. New accounts can be created at Fidelity for the restated plan, then the cash and assets transferred over. So the pre-tax cash and assets that are in that existing solo 401k, that basic solo 401k at Fidelity, transferred over to the new pre-tax account for the restated plan, then 2 new accounts in order to be able to make those Mega Backdoor Roth contributions. Because when you make a Mega Backdoor Roth contribution, it's really a 2-step process. You first make a voluntary after-tax contribution, and then those voluntary after-tax funds are then transferred over either to a Roth solo 401k or a Roth IRA. Great question from Nina. Thank you for bringing it. All right, next question is from Maria Jose. How long does it take to set up an account with my solo 401k? So we are a plan provider. We prepare the plan documents within the same business day when someone signs up. And that meets the December 31st deadline. That individual would now lock in the ability to make all types of contributions, to open up accounts for their solo 401k at the bank or brokerage of choice anytime up until their business tax return deadline, including any timely filed extension in 2026. So we make it very easy to meet the deadline, same day. And then you can take your time to open up the accounts and make the contributions. And we are neutral. So you choose your own institution. We don't hold your money, unlike other providers who will oftentimes require that the customer hold the money with them. You hold the money at the bank or brokerage of choice. But we're also very hands-on in helping you open up accounts. So for example, if the accounts are at Schwab, we pre-fill the paperwork that Schwab requires to open up the requisite number of accounts. Great question from Maria Jose. Another question from Amy. What is the process to opening after you make payment? Will I be asked more questions to create a plan specific to my business needs? So far, I was only asked basic questions. So those are the questions that we need answered. That's the information we need to draft the documents. So once you submit those questions, which is really just 10 questions, and then make payment, you're good. We established the plan the same business day. So there's no more questions in terms of meeting the deadline. Now, when you're ready to open up accounts, and as part of the initial process, we send you an email within the same business day with a link to our secure document portal where you can access the documents that were drafted based on the information submitted on the application, specifically for your business. In that same email, you're going to be able to upload the signature pages. And in that same initial email, you'll also be able to tell us where you want to have the new accounts at. So when you're ready to open up accounts, you'll need to tell us where you want to open up the new accounts at so we can guide you through the process. For example, preparing the paperwork to open up accounts at the bank or brokerage of choice. So you can most definitely, so next question is from Lewis. Can I get Trust EIN and Open Fidelity account in 2026? Most definitely. So in order to meet the deadline, you don't need to open the account. And that account can most definitely be at Fidelity. That's the most popular brokerage option for our customers. You will need an EIN number for the plan, but that can be obtained next year. So all that you need to do to meet that December 31st deadline and keep all your solo 401k options open so you can contribute all types of contributions by your business tax return deadline, including any timely filed extension in 2026, is just to sign up because then we'll establish the plan within the same business day. Then you can take your time to open up the accounts and make the contributions next year. Is it too late to get the tax deduction? So if you mean the tax credits, no, it's not. As long as you establish the plan by the end of the year, now you'll be able to start claiming the $1,500 in tax credits that all of our customers are eligible to claim for either creating a new plan or upgrading of the basic plan to our plan. And if that's done here in 2025, they'll be able to start claiming those $500 per year credits when they file their 2025 tax return. And then again for 2 more years, as long as they maintain the plan. Now, if you mean tax deduction, you mean contribution, which could be either a pre-tax employee contribution or a pre-tax employer contribution. Both types of contributions, of course, are supported with our plan. You've got plenty of time as long as you sign up by the end of the year, because that'll lock in the ability to open up accounts and make those pre-tax employee or pre-tax employer contributions all the way up until your business tax return deadline, including any timely filed extension in 2026. Is there a limit on the number of words in the trust name? Well, our approach for practical purposes is to use 2 words in the word trust to keep it short. So sometimes for processing purposes, there might be character limitations. For example, if there's a rollover check issued to the name of the plan, or just opening up the account or getting a checkbook issued in the name of the account. So just for practical purposes, it makes sense to just use 2 words in the word trust. It could really be any 2 words. It could be of a derivative of your business name. So if your business is Smith Consulting Inc., it could be Smith Consulting Trust, or it could be something totally unrelated, your favorite color, your favorite animal, right? Blue Elephant Trust. We generally, our clients generally don't want to use their own name for privacy purposes. You don't want to use living trust or family trust because it's not a living trust or a family trust. Don't use LLC or Inc. because it's not an LLC or an Inc. It's a trust. Yes, so you could enter one email in the initial email field, and then in that final field where you're entering the 2 words in the word trust, so the name of the plan, you can add more notes, add more content. So you could say, please copy, and then enter the email. It could be the email of an advisor or just another email that you want to have copied. Very specific to me. Another question, and that was from Lewis. Thanks for those great questions, Lewis. We also got some questions from Nina. Back to Amy. Very specific to me. I was working with Edward Jones. It is not working out well because they aren't familiar with my situation. Their solo 401k plan documents are geared towards S Corps, W-2 payroll. I'm a sole proprietor without either, but I don't understand how my solo 401k plan will work with Edward Jones, since currently it seems EG's product includes the plan document, trust establishment, etc. So based on experience, we've had plenty of customers that have obtained the plan documents from us. Most certainly can be for a sole proprietor. You don't need to have a formal legal entity in order to be eligible. You just need to report earned self-employment income on your taxes with no non-owner, non-spouse employees. So they'll get the plan documents from us for their sole proprietorship. And then Edward Jones will open up a brokerage account under the name and EIN number of the trust. And we have individuals at Edward Jones that are happy to speak to your Edward Jones advisor just to educate them on how it works at Edward Jones as far as opening up those brokerage accounts for a third-party plan. All right, next question. In order to file that, I need an EIN number from whomever's holding my 401k. So you do not need to have an EIN number for your business in order to be able to establish a solo 401k. So think of the sole proprietor who gets paid just as a natural person under their social security number. They may not have had occasion to use or need an EIN number for their business. They don't need one in order to establish a solo 401k. An EIN number will be needed for the solo 401k, but that's part of the account opening process. So that doesn't have to happen by the end of the year. As a matter of fact, the IRS system is going to go down here in probably about a week and no longer issue EIN numbers as they do their end of the year maintenance. So, but that's fine. If you're trying to meet the December 31st deadline, you just need to establish the plan documents, which we do within the same business day when someone signs up. And then that'll lock in your ability to open up accounts and make contributions by your business tax return deadline, including any timely filed extension next year. So when you're ready to open up the accounts next year, then the EIN number can be obtained for the 401k, which we obtain as part of our service. I'm an S Corp solopreneur paid via W-2. Is my solo 401k right for me? That's a question from Maria Jose. Well, in order to be eligible, I mean, we don't give investment advice, tax advice, etc. But in order to be eligible, you need to be reporting earned self-employment income with no non-owner, non-spouse, full-time W-2 employees working for any business owned by that person or a spouse, if any. So in other words, it's for a self-employed person that doesn't have any employees. Their business could be taxed as an S Corp. That person could receive a W-2. Even a spouse could receive a W-2, and they would be eligible to set up a plan. Now, reasons people set it up include that a solo 401k has the highest contribution limits for any defined contribution plan available to self-employed individuals because it allows for all types of contributions, right? In the words of the IRS, you're both the employee and the employer. So you can make both types. In addition, our plan comes with all the features, fully featured. So for example, it allows for tax diversification. So you can make both pre-tax contributions as well as Roth and mega backdoor Roth contributions. It enables the person to be eligible for the tax credits. So that's $1,500 in tax credits, $500 per year for 3 consecutive years. Also, additional features that attract clients to us include the ability to take a 401k loan, the ability to invest in alternative investments, the compliance support. So for example, once the value of the plan exceeds $250,000, an informational tax filing will have to be done for the plan. The name of that informational tax filing is referred to as a Form 5500 EZ. The late fees can be tremendous, $250 per day. But we handle that 5500 EZ, including filing under the electronic filing system, as for our clients who request it, and we do it for no additional charge. So that would be another reason that clients sign up with us. Great question from Maria Jose, another one from Maria Jose. So next question from Steven. For solo 401k, does establishing a plan constitute making an elective deferral? What's the contribution deadline? So all that you need to do is establish the plan. That'll lock in your ability to make all types of contributions. So you can choose how much to contribute as an elective deferral. You can choose how much to contribute as an employer contribution. You can choose how much to contribute as an after-tax contribution. You can open up the accounts. All of that can happen next year, right? Because the rules are different for self-employed individuals. Like we talked about, a lot of solopreneurs don't know how much they've made until after the end of the year. They might have a seasonal business where they're working all the way to the end of the year. So they don't know how much they've made until the end of the year, but the rules give them time to determine how much they can contribute, how much they want to contribute, and actually deposit the money, make those contributions. Great question from Steven. Next question from Maria Jose. Is the loan feature included by default, optional, or extra cost? Default. And we prepare the required loan documents for no additional charge. Customers just have to request it using our online form that they can do 24/7. Yes, it's an all-in price. So there's no hidden fees. There's no extra fees. So the support that is needed will depend on what's going on with the plan, right? Everybody will need, for example, mandatory plan updates. So you could think of 401k plans. Remember, they're legal entities and they're living entities because the rules change. 401ks are political footballs. Congress, etc., change the rules. The plan documents have to be updated. So we proactively reach out to our customers when the documents need to be updated. But other things, such as the loan documents, that only applies for those who are taking a loan. So as long as the customer requests the loan documents, we'll prepare those loan documents for no additional charge. What are the self-administration tasks that need to be doing? Just recording how much you contribute every year. So none of our clients, or I should say virtually none of our clients, thousands and thousands of clients, have a TPA. They don't find that it's needed. The solo 401k owner is the trustee of the plan. They don't need to have a separate third-party administrator. Moreover, We provide the ongoing compliance support for the plan. Now, contributions, that doesn't have to be reported by the plan. Now, at the same time, we're very hands-on. We provide tremendous educational support, for example, in terms of helping customers determine how much they can contribute, how to report it. So it's not reported by the plan. Customers don't need to tell us how much they've contributed. Instead, it's reported on the personal or business tax return. But again, we provide tremendous resources in that regard. Other flashpoints would include, for example, once the value of the plan exceeds $250,000. That includes the value of any defined benefit plan that might be sponsored by that self-employed business. All the different sub-accounts, right? If they got spouses, different types of funds in there, such as pre-tax and Roth, all of those amounts, those investments, et cetera, are summed up. If the value exceeds $250,000, there's an informational tax filing requirement referred to as Form 5500 EZ. Customers or their advisors just have to let us know. We'll add their plan to the queue so we can guide them through that 5500 EZ process, where we end up filing it under the electronic filing system for no additional charge. Also, a 1099-R, that's another flashpoint. So a 1099-R would be needed if you're transferring money out of the plan, or if you're converting money inside the plan. So if you're transferring money out of the plan, say to an IRA, that needs to be reported on a 1099-R. Or if you're converting money inside the plan, say from a pre-tax status to a Roth status, or an after-tax status to a Roth status, for example, as part of the mega backdoor Roth contribution. Those would also be scenarios that a 1099-R would have to be issued. But we have online forms. You can access them easily at mysolo401k.net/forms, where customers can let us know about those scenarios that need to have a 1099-R prepared. And as long as they let us know in a timely fashion, then we'll handle it for no additional charge. This week, I opened a self-employed 401k with Roth options effective January 1st, 2025. We generated basic shareholder minutes for the creation of the plan. If there are other documents we need to create, well, if you signed up with us, then we would have given you all the documents within the same business day. So if you worked with another provider, it would make sense to just check with them to make sure that you're all set. But we provide all the documents that are needed to establish the plan within the same business day. Do you provide the documents to formally declare your elective deferral? So we do provide a document that is part of the tax credit forms and notices, which is a deferral election form, but that is used for purposes of opting out of the tax credit. As far as electing your deferral, what most clients and their advisors will simply do is just have a memo to the file where they elect to make the maximum employee contribution, and then they'll have time to make and determine exactly how much they're going to contribute, as well as make those contributions by their business tax return deadline, including any timely filed extension. So ultimately, as I mentioned, the rules are different for solopreneurs. The rules give you time because many solopreneurs don't know how much they've made. They don't know exactly how much they're going to contribute. So it makes sense from a policy perspective. And this is clear per IRS publication 560. There's a chart on page 3 that states as long as you establish the plan by the end of the year, you can take your time to make the contributions, open accounts, etc. Another great question from Amy. Are there any additional charges for services like you were discussing, helping us open investment accounts? Most definitely not. That's part of the standard process. There's certainly no hidden fees whatsoever. So we charge $650. That includes the $525 establishment fee, plus the first $125 annual fee. Starting 12 months later, we charge our $125 annual fee that covers the second year. So if you add up all those fees over 7 years, that's not even going to amount to the $1,500 in tax credits that the solopreneur is eligible to claim based on establishing our plan. So in other words, those tax credits is going to more than cover our fees for the first 7 years. I called Fidelity. Fidelity has my fiduciary with my name, my assets. Are you the fiduciary? Do you work with Fidelity? We are definitely not the fiduciary. We're the plan document provider. We don't have access to our customers' accounts. We don't provide investment advice. We don't manage their money. So at the same time, we're hands-on in helping customers open up accounts. We're neutral as far as where the accounts are opened, right? We don't hold our customers' money. So we'll help you open up those accounts of Fidelity, but only you would have access to it, not us. Does the mega backdoor Roth contribution limit employer contribution? So if you make the maximum mega backdoor Roth contribution, which for example for 2025 is $70,000, then that's going to mean that you're not eligible to make any other contributions to the solo 401k. So the sum of employee, employer, as well as voluntary after tax, which is how one makes mega backdoor Roth contributions, cannot exceed the lesser of their self-employment compensation or the overall limit, which is $70,000 for 2025. I want to roll over an IRA to a solo 401k. Is it possible to roll over a large IRA account into a solo 401k for a small side hustle? Yes, you can roll over as much or as little as you want from an eligible retirement account. So that would mean from a pre-tax IRA or a former employer plan, could be pre-tax or Roth money in a former employer plan. And we help our customers with the rollover process, right? We've helped thousands and thousands of customers roll over funds from hundreds and hundreds of different places. And as you might imagine, the process varies. And we've tracked that experience in our knowledge base so we can make it easy for current customers, new customers to roll over funds. So for example, we would prepare the paperwork that might be required by that IRA provider to initiate a direct rollover so that they process it as a non-taxable direct rollover. I read the employer contribution limit, and that was from JB. Thanks so much, JB. Next question. I read the employer contribution is limited to half of the difference between your net earnings from self-employment and the employee contribution. So mega backdoor counts as employee. So that is not correct. There's IRS regulations that make clear that that rule that you're referring to does not apply to a solo 401k. But yes, in terms of the second part of your question, the mega backdoor Roth is an employee contribution, but it doesn't count towards the employee elected deferral limit, which is 23,500. Instead, you're able to make 100% of your self-employment compensation up to 70,000 as a voluntary after-tax contribution, assuming that you didn't make any other contributions to the plan, because you still have to consider the overall limit, which is 70,000. And then you can move those voluntary after-tax solo 401k funds either to a Roth solo 401k or a Roth IRA. Can I create the self-employed solo 401k this year to roll over my existing SEP IRA, even though I did not have any self-employment income this year? So in order to be eligible to set up a solo 401k, you need to report earned self-employment activity with no non-owner, non-spouse, full-time W-2 employees. And if you're going to set up the plan here in 2025, you would need to report that activity in 2025 when you file your 2025 tax return. I was told to contact the fiduciary. I'd like to take out ownership end of the year salary. So it sounds like you are referring to taking a salary from your self-employed business. So that would definitely be a question for your tax advisor. Let me know if I'm not understanding the question, please. The reason I asked about the process is that in the initial set of questions you didn't ask me things like, who are the trustees of the plan? Don't I need more than one person? So if it's only one person who's self-employed, then they are the trustee. That person is the trustee. If you have two persons, like say a husband and wife that are both working in the business, both reporting their own earned self-employment income, then it would be two trustees. I'm not a W-2 company. That's fine. You can definitely be a sole proprietor. Is the plan document going to state compensation is based on earned income? So we draft the plan documents, really the adoption agreement, based on how that questionnaire is completed. So if, for example, if the business is taxed as an S corp and that's what's indicated on the application, then compensation is going to be defined as W-2 wages, whereas it'll be defined differently if the business is taxed as a sole proprietorship. But keep in mind that if the individual has multiple sources of earned self-employment income, so for example, they had W-2 wages from their business tax as an S corp, but they also receive a Schedule C, maybe for another line of business. They could be a serial entrepreneur. They are able to aggregate from all sources of self-employment income to justify contributions to that one plan. We definitely have a lot of experience with drafting the documents, helping thousands and thousands of customers, and we draft them in a way to maximize flexibility for the solo 401k, and it's most definitely a qualified plan. We also provide a copy of our IRS favorable determination letter that confirms that it's a qualified plan. In 2026, what is the process of getting help with EIN and opening Fidelity account? Email, phone. So we're on the phone, we're on email, we have these daily webinars. So as part of that initial email that you'll receive when you sign up, that has a link to the documents that were created in the same business day when you sign up, there's also going to be an upload link in that same initial email where you can return the completed and signed pages of the establishment documents, as well as a next steps questionnaire where you can tell us where you want to open up the accounts. So you can simply, when you're ready to open up the accounts in 2026, return the completed and signed pages and submit the next steps questionnaire to let us know that you want to open up the accounts at Fidelity. And then we'll proceed with obtaining the EIN number for the solo 401k, as well as guiding you through the process to open up the accounts for the solo 401k at Fidelity. Great question from Lewis. I was told I needed to have my fiduciary's name. So let's see here. It sounds like you have a plan at Fidelity. So you probably need to contact Fidelity. So I'm not exactly tracking those questions, but thank you for participating. I opened up my account last year and didn't file for the $500 credit. Can I just file it this year, next year, and instead get a $5? Yes, you don't have to claim the credit. As long as you establish the plan, like our plan that includes the auto enrollment feature. Now you could also go back and file an amendment for the 2024 tax return to claim the credit. But it starts with the first year that you establish the plan, and then for 2 more years after that, as long as the plan is maintained. Beyond the help, and back to Lewis, beyond the help in year of setup 2025 and second year of 2026, and before account balances reach $250,000, what services are provided for the annual fee? So it's all the ongoing compliance support for the solo 401k is provided for no additional charge. I mean, what that means depends. So for example, if you're making mega backdoor Roth contributions, a 1099-R will have to be issued. If you want to take a 401k loan documents would have to be prepared. Let's say you have questions about how much you can contribute. You have questions about how to invest. You want to help open up a brokerage account somewhere else other than where you first started out with, right? Those are different common scenarios where we're continuing to provide that support for the solo 401k. My fiduciary has control. So in that case, you should contact your fiduciary. The 403B employee contribution needs to be combined with any solo 401k contributions for the $70,000 415C limit. That is correct. But you do not need to combine and include 401A accounts towards the $70,000 limit. That's correct also. So all the contributions that are made to the 403B, whether employee or employer, together with any contributions that the individual wants to make to the solo 401k, the sum cannot exceed the overall limit of $70,000. Okay, wonderful questions from everyone. We do appreciate that. So let's go through some of these slides. And then if there are more questions, please chat them up now so that we can be sure to get to them all. So again, we want to give you a last minute guide to opening a solo 401k for 2025 and what must be done by December 31st. Why this matters? Well, as long as you establish the plan by December 31st, 2025, you can then take your time to fund the accounts. You can take your time to open the accounts. And you'll keep all your solo 401k 2025 contribution options open. In other words, you'll preserve the ability to make all types of contributions, whether employee, employer, or voluntary after tax, by your business tax return deadline, including any timely filed extension in 2026. Moreover, you'll have established a plan that enables the solopreneur to start claiming $1,500 in tax credits. That's $500 per year for 3 consecutive years. So under the Secure Act, Congress authorized multiple credits to encourage businesses to establish 401k plans. One credit is a startup cost credit, which is not available to a solopreneur because you have to have non-highly compensated employees. In other words, non-owner employees participating in the plan, which obviously by definition, a solo 401k would not have such employees. But there's another credit that was authorized under the Secure Act, which is the auto enrollment credit. So all that's needed to be eligible for the auto enrollment credit is to have a plan that includes the auto enrollment feature enabled, as well as includes other notices that are needed. So we automatically draft our plans, whether it's a new plan or an existing plan that's upgraded to our plan, to include all that's needed to make the solopreneur eligible to claim the credits. Now, part of that feature will establish a default 3% contribution percentage, but the solo 401k participant has the right to opt out of that default 3% contribution percentage so that they can contribute in whichever amount or schedule they prefer, obviously subject to the limits and the deadlines. So in other words, you don't have to make the contributions. You don't have to make any contributions to be eligible for the tax credits. Just because the solo 401k owner exercised their right to opt out of the default doesn't mean that the plan doesn't include the features. It still does. So therefore, the business would still be eligible to claim the credits. And by establishing this type of plan in 2025, now the individual, the solopreneur, is eligible to start claiming those credits when they file their 2025 tax return. And then again for 2 more years for a total of 3 years. So those credits are going to more than cover our fees for the first 7 years. We charge $650 as an initial cost, $525 establishment fee, plus the first $125 annual fee. Then starting 12 months later, so for example, this time next year, we would charge our $125 annual fee that covers the second year. So it's a totally flat fee structure. It's not based on the percentage of the balance, no AUM fees. So there's no one-off or a la carte fees, for example, for the 5500 EZ or the 1099R. Those are provided for no additional charge. So those $1,500 in tax credits, again, that's a tax credit, not a tax deduction. So it's a dollar for dollar reduction in your tax liability, is going to more than cover our fees for the first 7 years. So that's why it matters. Now, who's eligible? Well, solo 401ks are for self-employed individuals. It's oftentimes referred to as an owner-only plan or a one-participant plan. So there's 2 prongs to the eligibility criteria. One element is that you need to be self-employed. And the way that you demonstrate that is by reporting earned self-employment income on your taxes. For example, if your business is taxed as a sole prop, you don't need to have a formal legal entity. You would demonstrate that as a sole prop by reporting earned self-employment income on Schedule C. Or it could be a disregarded entity, a single member LLC that's taxed as a sole prop, but reports that earned self-employment income on Schedule C. Let's say your business is an S Corp or a C Corp. In that case, earned self-employment income would be income reported on the W-2 from that S Corp or the C Corp. Or finally, if your business is taxed as a partnership, earned self-employment income is income reported on line 14 of the K-1 that you receive from the partnership. Now, the other piece of the eligibility criteria, the other prong, is that there cannot be any non-owner, non-spouse, full-time W-2 employees. So that means you could have contractors working for you, right? Those that are paid as independent contractors. That wouldn't prevent the solopreneur from maintaining and setting up a solo 401k. A spouse can be working as a W-2 employee, and that wouldn't prevent or limit the solopreneur's ability to set up a solo 401k. You just cannot have any non-owner, non-spouse, full-time W-2 employees. So in other words, a W-2 employee who's working 1,000 hours or more per year with 1 year of service, or 500 hours per year for 2 consecutive years. It's also noteworthy that you can have a regular job, you can have a day job and have a solo 401k based on your side self-employment income. So the key is that you can open the plan now. So as long as you establish by December 31st, fund later. So you can open up the accounts, you can make the contributions, you can determine how much you're going to contribute in 2026. And you can make all types of contributions, whether employee, employer, and or mega backdoor Roth. So in other words, voluntary after tax. So you keep all those options open. You can make all types of contributions by your business tax return deadline, including any timely filed extension in 2026. So if your business is taxed as an S Corp, March 16th, since the 15th falls on a Sunday, or September 15th of 2026, if you file a timely extension for your 1120S. So that critical deadline is December 31st to establish the plan. And how do you establish the plan? It's the documents, right? Because a 401k is a legal entity. So like any legal entity, it's the documents that create it. We make it super easy at mysolo401k.net because we generate those IRS approved plan documents within the same day. Then you can do the accounts later. You can determine how much you're going to contribute. You can actually deposit those contributions. You can do that in 2026 by your 2025 business tax return deadline, including any timely filed extension. So what do you need to do by December 31st? Sign up, right? Because we will create those plan documents within the same business day when you sign up. That's the key. The plan documents are in place. Then you can take your time in 2026 to return the completed and signed pages to let us know where you want to open up the accounts. Then in 2026, we will obtain the EIN number that will need to be obtained for the 401k in order to open up the accounts. But again, that can happen in 2026. We will prepare the paperwork or guide you through the account opening process. So you don't have to open the account for the solo 401k. You don't need to obtain an EIN number. You don't need to fund the account by December 31st. So it's a quick 1, 2, 3 process at mysolo401k.net. Click on open account, then click on get started under solo 401k. So we got 10 simple questions. That's how we capture the information we need to prepare the documents specifically for your self-employed business. Once the application is made, payment is submitted, we draft the solo 401k plan documents, those IRS approved plan documents within the same day. An email goes out with a link to our secure portal where you can download the documents. And then when you're ready in 2026 to open up the accounts, you can use the upload link in that email to return the completed and signed pages and then submit the next steps questionnaire. It's a quick 1-minute questionnaire that will be in that initial email where you choose where you want to open up the accounts. Because again, we're neutral, right? Unlike other providers, we don't hold your funds. We don't force you to open up the accounts with us. We are neutral. So clients obtain the plan documents from us and then open up the accounts at the bank or brokerage of choice. But again, we're very hands-on in that process. So some of the top benefits of opening up the plan by December 31st is locking in those contribution options, keeping all those options open. You don't need to know how much you're going to contribute. But if you want to keep all your options open and give yourself the most time to do it by, the plan needs to be established by December 31st. Once the year end has passed, there are still options to open up an account, but you won't have as many options. You won't have necessarily as much time to make contributions. The other top reason to sign up at the end of the year is just to be able to start the 3-year clock to be able to claim those credits. So if you sign up next year, you'll still be eligible for the credits, but you'd start with your 2026 tax return and then again for 2 more years of claiming the $500 per year credit. All right, that takes us to the end of the slides that we wanted to share. So we're going to go back to the questions that are being chatted up. If this information is helping you feel more confident about your future, please take 1 second to like this video. We'd really appreciate that. That helps us to get the word out to other solopreneurs, other advisors like you. Helps them find us. They might need this information. They might be trying to secure their retirement. So that'd be fantastic if you could like the video, whether you're on LinkedIn, YouTube, X. Also, we invite you to subscribe, as subscribing guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. Okay, thank you for the kind words, Lewis. We appreciate it. Thank you so much for joining. Yes, back to this one, Amy. So yes, so we have streamlined the process to capture the information that's needed. So I can assure you that we are capturing all the information that's needed to create, using our IRS approved plan documents, a qualified plan for your business. So we only need to know the information about one person if there's only one person participating. And that person, you, would be the trustee. You don't need to have W-2 wages. You can be a sole proprietor. The key is that you're reporting earned self-employment income. For example, on Schedule C. Hopefully that helps, Amy. Thank you for circling back. Is someone who has an I-10 and single member LLC with EIN taxes disregarded entity eligible for a solo 401k? If so, will he or she be able to open brokerage account with Fidelity? So if you don't have, if you do have a tax identification number and you're generally able to open up accounts at financial institutions, I don't foresee an issue with being able to open up a Fidelity brokerage account for your solo 401k. And then you would be eligible to set up the plan if you meet the eligibility criteria that we discussed, right? You're self-employed, reporting earned self-employment income with no W-2 employees working for any business owned by you or a spouse, if any. What happens to the owner? I'm not sure. I'm sorry, I don't quite follow that one. How do we opt out of the auto enrollment after the plan is established? So as part of the initial packet, you'll receive all the documents that are not only needed to establish the plan, but also eligible to claim the credit. So one of those is going to be a deferral election form where you can opt out of the default 3% contribution percentage, which will allow the person to contribute in whichever schedule or amount they prefer, of course, subject to the limits and deadlines, but still be eligible to claim those credits. So that opt-out form is provided as part of that initial packet. Is it true for the solo 401k that the employer contribution has to be made by January 15th of the following year? No, it is not true. So as long as the plan is established by December 31st, per IRS publication 560, you can make all types of contributions, including employer contributions by the business tax return deadline, including any timely filed extension. Can you utilize both the $500 tax credit and a tax deduction? Yes, there's nothing in the guidance that would prevent that. Another good question. So ERISA rules do not apply. So it's not an ERISA plan. It is still subject to certain provisions of ERISA, like the prohibited transaction rules, but it doesn't, for example, enjoy the creditor protection of ERISA. Instead, you'd have to look to state law and whatever creditor protection rules apply in the applicable state, which many states do track the ERISA, but again, it would not be through ERISA, it'd be through state law. And that's because it's a one participant plan. And that's part of the reason that a solo 401k plan can be offered in such a streamlined and efficient fashion. They said I needed the fiduciary to put all my assets in their account, survived on my name, and have to figure out how do I do that? It would probably be a matter of looking at the account records. It sounds like a very account specific scenario. Yes, you are. It just goes back to the question of opening the accounts. But if you've opened up other accounts at other financial institutions, I don't foresee any issue with opening up another account for the solo 401k. Yes, you are if you otherwise meet those criteria that we talked about. So we'll give it a moment to see if any more questions come across. We'll invite you to our community. We have the largest community of solopreneurs, advisors just around this solo 401k topics. It's totally free to join. You don't have to be a client. You don't have to be an advisor. All are welcome. You can join quickly and easily at mysolo401k.net/my community. So please don't hesitate to join. Yeah, it probably is a matter of looking at the documents in the trail. So if you go to YouTube, that would be a great venue to like the video. If you have a YouTube account, you can go to YouTube. Or if you have an account on Instagram or X, or if you go on LinkedIn, if you're on LinkedIn. Thanks for asking, Lewis. Well, that's really a question for your tax advisor. I mean, if you got a separate EIN number for your self-employed business, when to use that EIN is a question for your tax and legal advisor. Regardless of whether you have an EIN or not for your sole proprietorship, a separate EIN will need to be obtained for the solo 401k. But as mentioned, we obtained that as part of the onboarding process. But again, that can happen in 2026. Okay, well, it looks like that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, Please like and subscribe so we can keep building this solo 401k community. We'll be back here tomorrow with more crucial content to help you secure your retirement.